customer experience is a very, very, very broad topic, and the objective of this panel is really to talk about its role in fintech and the revolution, and also touch upon some of the new business models and technologies that are shaping customer experience. We're going to touch upon AI, but we're not going to get too deeply into it because tomorrow is our AI day. So I'm going to start off with an open question that may be a bit controversial, but I think about this often when I think about how I experience different brands in outside of financial services. So I'm going to start with this question. Is customer experience actually important? Do customers notice a good customer experience, or are they more concerned with cost and convenience? Marie.
Okay, so that's a really big one. Yes, customers notice customer experience, and one of the things that we are starting to see with technologies or ecosystems for data sharing like open banking and open finance is that they are presented with a vast array of ways to manage their banking and their wealth and their insurance nowadays. If you ask somebody in their 20s to 30s, they might have 15 different apps, and only 2 of them are banking ones, and those might not be the ones that they do their banking on. In the UK, we see that Apple Wallet has got an open banking license now. So if you're a bank and you're worried about the big tech, you cannot control your customers' access to their banking services. If they want to do it on an Apple Wallet, they're going to. But what you can control is the experience that they get when they reach you. So in terms of the bank's strategy for how they manage customer relationships and retain customers and delight customers, there are advantages to this as well, because they can see a wealth of data that they couldn't see before. So they can improve the customer experience, but they can also improve the way that they are serving them. And for the customer, there are obvious benefits because they are getting a better service.
And Jess, kind of you've seen and worked on many different types of products within financial services in fintech. Thinking about the ones that have been successful, has customer experience had to be at the heart of that product or service?
Yes, I would say I'm saying it with some hesitancy because it kind of depends. I think the blanket statement, does customer experience matter? Yes, there have been, I think, about 100 studies over the past few years, which is like, oh, if all of these things are taken into consideration when you're making a decision as to whether to take a product or not, how important is customer experience? 80% of respondents say super important, it's one of the most important factors, sometimes more important than price. But I think if you split direct retail consumers and SMEs in the context of fintech, I think it matters less on the SME side and it matters more on the consumer side, to be honest. I think that there's one compelling stat that I've started to bring out more and more, which is Revolut made £250 million from subscriptions alone in 2023. That's banking services for consumers, mostly free. You can go to HSBC and open an account and get, the basic core same features as Revolut, but the thing that excels Revolut is mostly the experience. So people, on average, are paying £250 million in 2023 just for the experience and the extra stuff around, rather than just an account. So, if the question is, does it matter? The answer, the answer is 250 million times yes.
And why do you say there's this difference between consumers and SMEs?
I think it's mainly that the consumer expectation has been driven up through innovators like Monzo, Revolut, and Starling over the past 10 or so years, and I think there aren't the equivalent. I think Wise is maybe one of them. There aren't the equivalent SME propositions out there that are really lifting expectations for everyone. And also, SMEs traditionally are like half stuck because lots of the finance process, the analytics process, like the accounts processes, still largely with those big organizations. Most people still bank with HSBC and Lloyds. So I think that the tide needs to be raised a bit, and the consumer tide has risen faster. The SME tide, I think, will get there.
Yeah. So it could change in, say, 5 years or so.
Yes, exactly.
Yeah. I mean, I have a couple businesses. I'm an SME, and it's like beggars can't be choosers, right? It's very difficult and complicated, and you have to, cobble everything together to find something that works for you in this space. So I think definitely underserved.
100%. Again, I use the Wise example because I recently used Wise to open a separate business bank account because I needed to get paid in euros and a couple of other currencies, and I kind of needed it quick. And I thought, I'm a Wise personal customer. I'm fairly sure the onboarding process will be as quick. Connected to the company's house, did a quick ID check. I had an account, like an e-money account, open within an hour, I think. If I'd gone to HSBC, I don't think it would have been an hour, if I'm being honest.
We have someone from HSBC here, so apologies.
I'm fairly sure whoever that person is will go, yep,
Super. Nadav, is customer experience important when crafting digital products and services?
This is becoming started a provocative question, but we all seem to be in quite an agreement here. I think for us it really is. So I work for a company that designs interfaces and experiences. And if I think about that shift from retail experience into the SME side or the business side, we often talk about businesses in general and internal software for businesses being pretty bad experiences, to kind of choose my words carefully here. And we talk about that consumer grade CX, right? So how do you take that level of experience that users are expecting to receive on the mobile phones in the retail apps and take that into the SMEs? I think this is key, and I sort of agree with Jas here that sometimes it's actually more important than just the price, or it is part of convenience. If I think about especially younger generations or sort of Gen Zs, if a product is appealing and it's fun to use, it might be the thing that draws me back time and time again to use that product. So 100% agree.
Okay, so we're all in agreement. And Abdullah, I mean, I think it would be interesting to get your perspective in terms of building Aleph Bank. How did customer experience play into it from day one, from day 30, from the 6 months? Where did customer experience kind of fit into your journey?
Thank you. No, that's I fully agree with everything that was said before, and maybe I'll also touch on the human side, the culture side of things. I come from Tajikistan. It's a country of about 10 million people, mountainous place, and we've been fortunate to build a bank there over the last 10 years. And I think, thankfully we've been able to build some of the best UI, UX. The app today, we have about 55% market share in mobile payments. We have 59% market share in Visa payments. But I think what lately is important to us internally is how do we get things not only right, but when we get things wrong, how do we do the customer experience great? So I remember a case when back in the days when we did get things wrong quite often, quite a lot. We have to have signatures in Tajikistan, unfortunately, still. So even if you're a digital bank, you still have, in some cases, have to have signatures. And it was a New Year's Eve. Everyone wanted to do shopping, and in those days, we at Alif get these huge queues of people having to come, unfortunately, to do stuff. And there was this person with his 2 kids with their gifts already in hand, and they just had to wait in the queue to get it signed and take home. But the queue was so long, they just left, right? So our team noticed this, found those gifts later at the end of the shift, bought them, got into a Santa Claus, local Santa Claus version outfit, went to the home of this person and gave the gifts, right? So it's about, the great customer experience, I think, is about also when you get things wrong, how do you fix that? And empowering people to do beyond what is probably written somewhere and to take that initiative.
Yeah, exactly. This reminds me a story from Space, which is the Greenfield Bank of TBC in Georgia. When they launched Space, they had such overwhelming demand that they were struggling to actually send out the debit cards. So they hired a bunch of college students and kind of e-scooters and had, people hand delivering the cards so that they could also get them as quickly as possible. And I think this also, feeds into kind of the next point and the next topic of discussion is do we still need humans to make a good customer experience for consumers and SMEs, or do we think this can be something that's 100% digital in the context of financial services? Nadav?
I thought it might take us a bit longer to get to the AI. That's really interesting. So we're looking at quite a few more kind of advanced implementations of AI. Part of that is the whole space around generative UIs, right? And if I think about AI becoming increasingly more important, but actually taking a backseat, right? It becomes a bit of a brain that speeds up or kind of generates the interfaces on top. I've seen an article from, I think on Bloomberg, that a high street Israeli bank just given full permission for an AI advice tool, Bridgewise, I believe, to transact and actually create full advisory service plus execution. And that is the second or the third largest bank in the country. And that is part of an experience, right? Phil was just talking about wealth management and how the conversation is important and where do you meet customer. And increasingly, I think there are opportunities for services to have less of that human interaction. I think if we look at kind of smaller, kind of more local banking services, the Monzons of the Starlinks, they're actually taking the human interface very much to the back. And some of the AI-related business models are working towards payment based on resolution, right? So case resolution-based models. And increasingly, it's not it will not happen this year or next year, by the next 5-10 years. I think there's actually a pretty good likelihood for that to happen.
That's interesting because I was in Riyadh a couple weeks ago doing some customer interviews and actually speaking to some Gen Z urban dwellers, and they said they would 100% not trust a fully AI-driven wealth management solution, and they value they perceive a human as providing a more personalized service than an AI.
I did a piece of research a couple of years ago with financial advisors, and I think there's a lot of data to back this claim up, for sure. The ballpark figures were that a face-to-face conversation would result in a 10 times larger deal, right? Or kind of the volume of the transaction would be 10 times larger than a call center that would have the exact same conversation. I think what AI is doing is probably taking us, or kind of provides the opportunity to take us a bit closer to that face-to-face conversation. So it may not be fully the full experience, but with different UIs, with different experiences around it, I think we could get a lot closer to that.
I guess just to follow up, Megan, on that point, they wouldn't trust AI if they don't know that something is AI. Does it really matter?
Exactly.
So if you're doing an A/B test and one is AI and one isn't, and they think they're both human, then I guess their opinion in that scenario doesn't matter. And I mean, the example I pull out is Klarna. Klarna's CEO is very bullish on AI. Start of the year, he said, I'm going to run this little AI experiment and see how much of my customer support function can I replace. And then 3 months later, he's like, I'm replacing 2/3 of my customer support function. All of the metrics are positive. CSAT scores are positive, or like for like. And I think in that's a very much a front to back AI transformation, which I think is what he's going for. I think lots more financial services companies are going for a front to back and back to front approach, where they're kind of AI-ifying their data inputs, data cleansing models, and also doing the customer service, customer experience end. So I think 5 years is a good estimate for maybe the first. And I think maybe the first will probably be Klarna based on how they operate and the lack of need for any sort of human interaction.
But I think today, I mean, you can tell when something's written with ChatGPT, right? So I think maybe, I don't know, maybe you can tell the difference, but maybe I think...
It depends on how important the decision as well. If it's a mortgage you're applying for, you probably want to talk to a person. If it's just doing a buy now, pay later transaction, then that's less serious. But also, I think the maturity of AI and what we read about in the press steers how much consumers are willing to adopt. If you know about data sharing, then you see articles all the time about how you can have bias built into AI recommendations. For example, if you have embedded insurance where you're buying your car, if you're the sort of person who would buy the gold level of insurance, you're going to get recommended a different price from somebody who is more budget conscious. But it's basing those on quite sort of basic decision-making models. So I think it's still got a way to come before it's a seamless user experience with only AI.
And Maria, I want to stay on that point and kind of shifting more towards open banking and open finance. I mean, here in the UK, I think open banking has gotten a lot more traction in comparison to some other European and global markets. And, you know, open banking, open finance, being able to kind of passport your data with consent, I think opens up a lot of opportunities for more personalized, more relevant, more timely customer experiences. Do you think the potential has been realized?
Not yet, by a long shot. So it's really early. There's been huge strides made. The UK is now quite a number of years in. The approach that they took to creating a data sharing ecosystem uses something called a trust framework. So a trust framework establishes the rules, the roles, the permissions, the standards that govern how different entities can share data. So it then provides technical certainty that you are who you say you are and that you've got consent of the customer to access their data for a specific purpose, for a specific duration. And it's a transparent governance access layer. So that has been transformative in helping the UK start to build propositions. Any data provider or a fintech can have access to everybody else in the ecosystem. They can find the APIs they're looking to connect to, and they can provide technical credentials to be authenticated and authorized. And that's the direction of travel that we're seeing around many jurisdictions in the world. The largest ecosystem is Brazil, and they're currently processing nearly 2 billion API calls per week between 1,000 data providers and data receivers. So this technology is enabling competition in a way that it didn't previously enable competition. If you don't have this centralized structure which governs the access for everybody, you have to have bilateral agreements between all of the banks and the fintechs. If you're a small bank or you're a small fintech, you cannot afford to have bilateral agreements with everybody in the market. So you have to choose who you have agreements with in order to have a minimum viable product, which means you're not going to be able to provide as comprehensive a service to your consumers or your small businesses, and therefore it's creating an anti-competitive system.
So, I mean, assuming that, you know, the frameworks are in place, how do you win over the trust of consumers? Because on the one hand, you know, consumers are hearing, don't share your credentials. They're, you know, quite worried about fraud. It's their money, right? But then at the same time, they're seeing a product or service that is, hey, why don't you share your transaction history, you know, your data? How do you win over that trust to realize this opportunity?
It depends which country you're talking about, and it depends on how the regulator has enabled this. So if you're talking about a country like the UK or Brazil, where there is this centralized infrastructure, you are authenticating, you're providing your consent through a very recognized process. You're on an app, you select the bank that you bank with or that you want to share the data from, and then you're taken to their app and you authenticate yourself. And in those more evolved data sharing ecosystems, the standard for data sharing and privacy is something called FAPI, which is Financial Grade API, and that also relies on mutual authentication. So a lot of what we're used to in banking and finance is a username and password, so key and secret. The FAPI grade standard, which we're seeing becoming dominant across data sharing ecosystems, is mutual authentication. So things like confirmation of payee is an example of that. So I think that gives some element of trust to the consumer.
Thank you. And moving on to kind of how we build customer-centric digital financial product and services. I've noticed over the past couple years we've seen a lot of niche solutions. So, you know, banks and products that are targeted for a very specific you know, customer segment. And Abdullah, I know what you're doing now is very much focused on a niche segment. How important is it to focus on a very kind of targeted segment when you're developing an MVP in the initial stages of product development and building your brand?
Yeah, no, I think it makes a lot of sense. So at the moment we are in the UK, we provide Islamic car finance for gig workers, Uber drivers, Bolt drivers, to buy electric cars, plug-in hybrid cars. So it's like a niche within a niche within a niche. But we know exactly who we're working with. The average age is 51, mostly they're from Bangladesh, from Pakistan, from India. They share similar sort of faith, similar backgrounds. We see mostly even go to the same restaurant. Actually, we're now going to work with this restaurant too. But it's near the airport, so you know a lot of taxi drivers go there. So it makes a lot of sense to start something. And if the idea is then to, and the way we've built Alif in Tajikistan has been to start with something as a wedge and then build around this. So the examples we started in Tajikistan was point of sale finance, where we provide on average 12 months finance to buy home appliance or furniture or things like that. And over time we've built an ecosystem around it where people no longer have to wait. So today we have the leading e-commerce website in the country. There was no delivery system in Tajikistan, so we have had to build our own delivery system, and we deliver today thousands of sort of urgent things every month. And to build everything around it, so we had to even build the best merchant experience, to build them internet banking experience, so that, and provide them finance so that they can buy things ahead of the seasonal sort of spikes, and to be able to hold, to build all this infrastructure around our customers. I think that's been the journey we had, and hopefully I might have here.
And then does it make more sense to move on to another niche, or begin to kind of cross-sell and expand your product offering to really hone in on that niche?
Yeah, so in the UK, for example, the product we want to launch next is 0% car repair finance. So on average, every car needs about £700 of repair. There are 40,000 garages, and 35 million pounds was spent on repair last year. So we want to be able to provide our customers with 0% interest-free car repair, where we earn a commission from the merchant, and they can stress-free split their payments over time. And conversely, as people go to repairs, get our service, and if they're repairing their car often, we can say, if you wish, we can provide you a car finance to get a new car. So, and hopefully from there on, more products around this central product at the moment.
Okay. So we kind of talked about getting up and running and focusing on this niche, but I kind of want to move to larger organizations making, a greenfield banking play, or perhaps the likes of Monzo's or, Revolut, some of the more established, organizations that have put customer centricity at the heart. Nadav, what are some of the challenges that organizations have when it comes to, maintaining that good customer experience that was at the heart of their solution from the get-go, but now, they've scaled up, they've grown up a bit, they have other things to kind of focus on. What tends to bog down organizations, and how do you overcome this to keep that customer centricity mentality?
No easy questions today. But I think there might be three different questions in that, and Abdullah started from one place that is very well defined and actually makes life easier, I think, in many respects, because the mission is clear, the segment is clear, the market is clear, and then you can start thinking about experiences for that audience. The Revolut and Monzos are they probably live in a slightly different category, perhaps alongside Nubank in Brazil. And that is a different group from some of the logos that we see on the buildings around us in Canary Wharf, right? Some of this might be a slightly different beast. I happen to walk across the upper two groups, so not quite as early stage, but kind of the larger ones. And I feel like what is really important, and when you get it right, you start with exactly what Abdullah just did, and have that clear statement, right? And you often go into those higher floors of those buildings, and there's a really strong focus on customer experience, and customer experience, you hear it time and time again. But there isn't really a definition of who the customer is, right? And that becomes someone that is idle and they're not in the room. We just try to design something for them. And when you start thinking about how you design something for someone that is absent from the room, you can design pretty much everything and claim that that has a part to do with the experience that you want to create, because effectively you've never really defined what that experience needs to be. And so the next level down, or the next challenge, I think, is that many of those organizations are not quite pragmatic on the experience that they want to create, right? And when I talk about being pragmatic in relation to that experience, is really having a clear framework of what is important, right? So we've designed just recently a framework for actually one of the banks around here that goes from a very top level and asks, right, what are the values that we want to be known for as a bank? And from that, what are the fundamental CX aspects that are important to us? And we define them in really simple words, right? So one example, like one of those is, it was really important for that bank to create value exchange moments. We use that frame. It's like just 3 words. It's not a long statement, but you can then break it down to the next level and talk about, if we want to create value exchange moments, what are the CX levers that we as an organization, as a product organization, as a design experience, as a design org, can pull and actually make sure that we are utilizing and we're building toward that experience that we want to design. It really gives I guess in a way, a tool for all designers, all product managers to work towards the same thing and ask the same questions. And you can pretty much use that framework to evaluate every new proposition that you want to launch, every new product within the product, every new segment that you're trying to get into. And that is crucial, because if I think about these businesses scaling and getting into new markets and getting into new segments, the same lens is being taken time and time again to evaluate the experience. And then lastly, I think again, someone touched on that point earlier, is that speed of execution. You can create that experience and it will be great on paper, but if it takes 18 months for that to meet with reality, it may not be relevant. It may be very well that someone else has done it better than you, and you're launching something that is outdated. So I think that's key. What bogs down, we can go into a 15 minutes conversation about cultures and silos and all this stuff, I think.
Exactly. Jess, from your perspective, I mean, I know that you work with both the bigger banks as well as the smaller fintechs. What are some of the new business model and trends that you're seeing that are helping either big banks or smaller kind of startups and fintechs meet customers at the right point and the right time to really, nail that customer centricity?
I mean, the last sentence has kind of made it easy for my answer. Embedded finance, meeting customers where they are at the right time, data exchange, making sure you're pushing the right products to them. And I think that in itself is a kind of two-sided value exchange. Banks get the benefit of a fully digital channel to serve their own customers or distribute finance to a new set of customers, and fintechs have access to a mass of customers. And I think that's the challenge for more fragmented, especially when I think about SME finance specifically. there are lots of SME financiers, especially in fintech space. The challenge is, how long are we going to be around for? Have we got time to acquire this number of customers over this short period of time? How much money do we plow into marketing and acquiring this big, massive customers? Or do we just partner with a bank and have access to the customers and actually utilize our tech without spending millions and millions of pounds every year on marketing spend? So,
staying with, embedded finance, do you see embedded finance being a significant threat to incumbent legacy banks in terms of the primary relationship with customers, or?
No.
It's an opportunity.
Yeah, I think they are. If most fintechs are being honest, like exit strategy is something everyone thinks about. One of the most clear exit strategies is be acquired by a bank at some point. Again, I worked on one, and the exit strategy was, well, hopefully they'll use us for long enough and just go, it's not efficient for us to use this third party and pay them a fee every time we give them a customer. We can acquire the tech, pull it into our ecosystem, and then service the finance that way. I haven't really seen a direct embedded finance threat to banks. And again, I think banks are leveraging it, flipping it the other way and going, we have the massive customers. It's going to take you 10, 20, 30 years to get close to this level, especially if you're talking about Lloyds, for example. And they go, we hold all the chips. If you want to come work with us, you can work with us. Or you could spend the next 10 years trying to build a 2 million strong SME customer base. But good luck.
The other thing with embedded, I completely agree with that. Putting banking services in line with where the customer is may be the way that you can reach new customers in the future, because the traditional ways of marketing to them will be restricted, because as consumers become more aware of data privacy and the value that their data has, and we're already seeing this in terms of being able to stop apps tracking your behavior around the world, it may become quite hard to reach new customers. And I've got, Phil, the last speaker, gave a story about his daughter, so I'm going to counter one with my son to give you an example of this. So when he was 12, I sat him down and gave him the good parent talk about how if you download an app and you're not paying for it, you're the product, not it. And anybody who has a 12-year-old will sympathise with me here. He just looked at me completely blankly. He was completely bored. So I did the whole, I know what I'm talking about. I talk about data sharing, and he just looked at me and turned straight into sarcastic mode and said, Mum, you let everybody track you around the internet because you use Google. And I use the data privacy protecting DuckDuckGo. Shall we have this conversation the other way around? So he already knew the value, I mean, really annoying, but he really knew the value of his data already, and he was 12. So that's one precocious example, but that new generation are going to be very aware of who they share their data with and who they interact with. So embedding products and services that meet their values, talking about product design and needs where they happen to want to consume them, is probably going to be even more important in the future.
Yeah, I mean, I think we've talked a lot about, I don't have children, but I've heard a lot of anecdotes about how financially savvy children are. I think Abu Bakr mentioned that his daughter is fixated on exchange rates, and your son with data privacy. I think we're going to have to completely rethink of how we create products and services for, beyond Gen Z. I want to kind of wrap up with a question, because I know we have a lot of individuals here that work within larger banks. And oftentimes I see that customer centricity, customer experience gets a lot of lip service within a large organization. People bring you in and they say, oh yeah, we want to do customer interviews, we want to build a product with customers in mind, and then that very quickly gets pushed to the back burner. So, regulation, tech, operations, lots of different things seem to kind of take precedence over actually building customer-centric products and services. So how can you overcome this, and is there any advice you would have to banks and larger organizations, and making sure that it's not just lip service, that customer centricity is important, as we've kind of summarized and discussed on this panel. Abdullah, I'll start with you.
Sure. I'll go back to the culture point. We hire a lot of students, so the average, we have 1,300 employees. About 70% of people we hire, they're students, and we try to share with them as much as we can that we expect them to exceed expectations, to do more, etc. And a lot of the great ideas, a lot of great suggestions come from them. A lot of that, examples of people doing beyond what's expected come from them, to put the customer at the center. And then we develop products according to those as well. So another example of a product that came through this sort of discussions was we are an Islamic bank, so we cannot give cash and ask for more cash in return. That's why we usually provide finance to buy something. But sometimes our customers actually need cash. They just need cash to send someone, etc. So we came up with a completely interest-free product. Zero commission, zero interest, nothing, and if the customer wishes, they can give a tip at the end. So it's and now it's like a third most often used product within our ecosystem. So tens of thousands. But we issue about 200,000 loans every month. But that's one of the top three. And I think it all starts with empowering the team to taking good care of them, so that they can take good care of the customers.
So culture. Nadav?
Culture. But maybe one thought on that is some of the new players, some of the fintechs are going to force the rest of the industry to create better experiences, right? I saw a chart this morning with the NPS scores of US-based banks, right? And you see the Cash app, which is maybe a bank, maybe not, actually tops most of these charts across generations, right? So Gen Zs, Millennials, Gen Xers, it is ranked as one of the top 3 in each of those categories, right? When we look at some of the products that we use in the UK, a lot of them were heavily influenced by the Monzos and the Revoluts, right? We see something being done by a smaller player, and a month or 2 or 3 after, we would see that across the industry, and that becomes a hygiene factor. That will be a very strong pull force, and then culture and younger generations actually getting into those roles, right? Getting into design, getting into products, having much more influence around product will eventually have to result in better experiences.
Yeah. Jess?
I say go back to basics. I think culture, I'll go onomatopoeic structure, culture and structure, with a little bit of chaos. So if you're building a new product, who are you building? Again, going back, who are you building it for? Why are you building it? What tech is going to enable you to build it faster, stronger, more secure? And then put that into an overriding vision with a mission and a strategy, and make sure everyone knows what those kind of core principles are. Because over time that usually gets diluted, but communicating that over and over again to people within the bank, especially when you're trying to incubate a project, the best way of doing it is put it on a pitch deck, make sure the structure is there, make sure the vision is clear, the mission is clear, the personas are clear. And then once you get to a certain mass and you're like, we've got high activation, 100,000 customers, start to loosen the shackles of the user personas. Okay, who else would this product benefit? Are there some circles over here, the communities over there? But structure, I think structure is at the core of it, which is why I think that the consumer duty rule from the FCA is good, even though regulation can sometimes be bad. This kind of rules for how to build products well inside banks. And
Can you quickly explain what this for the non-UK folks here?
It's essentially a list of rules to inform the market as to how to build products better and to be more customer centric. Essentially, more benefit back to the consumer. For one of those pillars is moving in line with market rates. So banks have to move their interest rates as interest rates go up, as well as if they go down. So you can't just delay your savings rate drop or increase by 6 months. You have to do it within a reasonable time frame. And another one of those is, especially on the product and consumer side, building products that actually benefit customers, making that benefit clear and writing it down in some sort of product brief. That's the requirement. Whether that will trigger broader change, what the repercussions are, not clear yet. I think it's akin to money laundering in 2007-ish, where they'll start to kind of look at banks and go, you're not doing this right. And then a few years later, they'll go, you're not doing it right. We've told you 4 times. Here's a fine. And then eventually everyone will kind of cotton on. But they're essentially rules for building better products.
Thank you, Joss. And Marie, what advice would you give in terms of, thinking strategically about how to capitalize on open finance, thinking, how this can benefit products and services in that customer experience?
Okay, so on the customer experience side, so I don't have product design experience, but what I have very good visibility of is which use cases under open finance are gaining traction around the world. And I can give 2 examples, and both relate to providing greater convenience to the customer. So one of the embedded insurance examples I love is where the flight insurance, travel insurance is embedded in the platform where you buy your flight, and it's using data from the platform to trigger actions. So if you've got flight interruption insurance and your plane is delayed, it will automatically trigger a payout. That's travel insurance I would buy. If anybody's tried to do a claim, trust me. The other one is about onboarding. So onboarding is always very painful. So having to prove your identity and open an account. There is a fintech, a deposits marketplace that I use called Raisin, where you onboard once, they do all of the KYC, and then they provide you with access to savings accounts from all around the world. So banks are able to access customers in the UK where they previously wouldn't be able to, and I'm able to access savings accounts very simply at a click of a button, so I can move my money to benefit from very small incremental increases in interest rates. So think about your strategy of what you're trying to do to serve your customer. What data can you access in order to make incremental small improvements? So those are a couple of examples.
That reminds me of a use case I saw. It was with a bit of embedded insurance, embedded finance, but it was with one of the large hotel chains in Singapore, and they offered this kind of luxury stay in Singapore and in the suite in the hotel and stuff. But you got your money back if it rained for more than 6 hours, and it was triggered by data.
The camping one too.
Data from the weather. And I think this, we've touched upon AI and data and embedded, and I think there's some really fascinating use cases. All of us as customers are like, wow, that's amazing. I would take that out. So I think everything is,
There's another one which was very recently. Visa have announced that on their consumer payment receipts, they're going to put logos of the merchants that you spent the money with, and the actual trading names. So if anybody's ever looked at their bank account and thought, who on earth was that? Again, it's just little benefits that make a difference and delight the customer.
Cool. Do we have any questions?
Covered it.
No? I think, we covered quite a lot. So thank you, everyone.
Thank you.
Thank you.
Thank you.
Yeah.